Hello friends, this is Raj Sastry from Raj Option Trading. Today is September 7, 2021. We will talk about stock and option purchasing ideas for the week of September 7, 2021. So with this, we'll talk about TTM Squeeze indicator by John Carter that tells you when it's a good time to buy stock, call or call option or call spread. So with that, let's get started here. So here we got a quick primer about what is TTM Squeeze and TTM Wave. As you see here, I typically like to look at multiple time frames. We got here 1 day, 1 year chart here, and we got 2 year, 3 day chart, and a 5 year weekly chart, and a 10 year monthly chart. So that tells you in a various time frame how a stock is doing. For example, here you've got CLF here. So here we can see here on a yearly chart, it's doing great. And same story with the 2 year chart and a 5 year chart. But if you look at a 10 year chart, it still has got more room to run. It was as high as 91 earlier, but now it's barely at 21. It kind of helps you to put the things in perspective. And then we got here squeeze indicator here, which is the first lower side lower chart here. It tells you, pay attention to the red dots here that tells you tight compression of volatility. At these points, the Bollinger Band is inside the Keltner channel, and something has to happen, because volatility is so compressed. Stock has to go up or down. So here we got red dots, tight compression of volatility, and afterwards we got a first green dot and stock went up. So if you watch the longer term C wave, it's squarely above zero. That's why it's a long indicator. It will be basically firing on the higher side, or a bullish side according to John Carter. Same story here, we got red dot here, and when that red dot happened, longer term C wave is above zero, it went up. So with this here, you can see, whenever you see red dots, that's when tight compression of volatility, market is trying to shift because it cannot stay in the same range. Volatility is so high, it has to go up or down. So here you can see, by looking at previously what happened, you can see if the stock is responding to TTM squeeze indicator. In this here, it's responding pretty nicely. Then we got here longer term wave here. Shorter term A wave. Shorter term A wave indicates what could be the direction. For example, if the A wave is above zero, that tells it may be bullish. But if A wave is below zero, that's a bearish indication. But John Carter says, don't worry too much about shorter term A wave. Instead, focus on the longer term C wave. If the C wave is above zero, go long. If the C wave is below zero, go short. So, in the A wave, if there's a yellow bar, that tells you it's a bullish indicator. If there is a red bar, it's a bearish indicator. And when it comes to C wave, longer term C wave, if it's a light blue bar, if it is bullish when it's above zero, and if it's a dark blue bar, it's bearish. And then, as you can look through here, the squeeze can happen in 1 day chart, or a 2 day chart, or a 3 day chart, or a weekly chart, or a monthly chart. The squeeze on a daily chart will last for a couple days. Squeeze on the weekly 2 day chart will last for, in the multiplier of 2 days, 2 days, 4 days, and so on and so forth, or a 3 days, 6 days, so on and so forth. And weekly chart can last for a couple of weeks, and monthly chart can last for a couple of months. You can also look at intraday, like 5-minute, 10-minute type chart if you're a short-term trader. So typically, if you're a longer-term trader, I would say look at maybe weekly or monthly. If you're a shorter-term trader, look at intraday or 1 day. For a swing trading opportunity, typically you can look at 1 day, 3 day, and one week type chart that tells you good deal about when the stock is about to break out. So like we talked about, red dot indicates tight compression of volatility. Bollinger Band is within the Curtin channel. Look over here, we got tight compression, and afterwards if you look through here, we got the longer term C wave below zero, and as you see here, it became dark blue here, became shorter and shorter. That's when we got here higher, or a bullish, stock went up, because bar became shorter and shorter here, and also the shorter term C wave is indicating it might fire on the higher side, because the shorter term A wave, sorry, it's above zero. And the first green dot after a series of red dots, for example here, look through here, first green dot, that indicates the energy is about to be released, market is going to shift. And the best squeezes are the ones that fire off in the direction of C wave. For example, look here, we got red dot, first green dot, C wave is above zero. That's the best squeezes that will fire in the direction of C wave. In this case, C wave is above zero. That's why stock went up. So if you want to buy call option, make sure the IV percentile is below 50, and RSI is below 55. That's when you don't pay too much money for the call option. Pay attention to how stock has responded to the squeeze indicator in the past, because some stocks may not respond well to squeeze indicator, but others do very well. So that's why it's good to pay attention to how stock has responded to squeezes in the past. So with that, here we got a list of trading ideas for the week of September 7th. So I got here ticker symbol, the name, the price, market cap, the usual indications, and then we got sales and sales growth. Very important. If you are a fundamental type trader, look for fundamentally good companies with nice sales growth. In 1 year sales change, and quarter over quarter change, look for positive double-digit sales growth if you're a fundamental trader. Also nice gross margin. For example, ABBV here, it's got nice sales growth and gross margin. And same story with stocks like Digital Turbine here, and DocuSign, and so on and so forth. And then we got here short float. I think it's very important to look at short float. For example, you got few stocks here like American Airlines, high short float. Even Carnival Cruise, a little higher short float here. And ARDX, same story. So these are the ones you could pay a little more closer attention. They can give you more bang for the buck if you understand them well. And then we got here IV percentile. Typically, it's good to buy stock or call option when the IV percentile is a little lower. That will give you a little more predictability, little more margin of safety. For example, here Carnival IV percentile is low, much below 50, and even Bank of America, it's a good one right now. So typically, if you're a stock buyer or even a call option buyer, look for low IV percentile, so that way you don't pay too much premium, and it's a better trade. And RSI also, if you're a stock buyer or an option buyer, look for a lower RSI. For example, Carnival here, good here, below 50 you could buy. Same story with Bank of America is also okay, borderline. And then you got a couple others here, ARDX here, and even let's see, Digital Turbine, a little high, but American Airlines is okay too. And even Barrick Gold you could buy at these levels. And then we got here squeeze here. I got indications from a 1 day squeeze, a 3 day squeeze, 1 week squeeze, and a 1 month squeeze. So these are the multiple squeeze indicator per John Carter's TTM squeeze methodology. So whenever you want to trade, look for where is the squeeze right now. Is it on a daily or a 3-day chart or a weekly chart or a monthly chart? Sometimes you will see squeeze in multiple time frames. You could look at them too. For example, Bank of America, there's a squeeze in a one-day chart and also a weekly chart. So coupled with the what volatility is doing, what the RSI, that tells you is it good to buy or not. Right now, Bank of America looks good with the one-day squeeze and a one-week squeeze. It tells you right now, there is a tight compression of volatility. Bollinger Band is within the curtain channel. Market has to shift. It has to go higher or lower pretty quickly, drastically. So that's why there is a squeeze in one day or a 3-day or a weekly chart. Then we got earnings. It is good to know when is the earnings, because around the earnings stock tend to move up or down a lot. So it's always good to know when the earnings are coming next. So if it is not coming in a month or two, don't worry too much. But if it is coming in a say week or two, you got to pay a little more attention there. And then look at performance here. I got here 1 month, 3 months, 6 months, and so on and so forth, even 5 years for you to understand if the stock is one trick pony or it's got what it takes to perform in the longer term, say 1 year or 5 year. And then we got here how much the stock is off from 52-week high. So if it is very close to 52-week high, probably just wait for a little more pullback. But if it's already pulled back a little bit from 52-week high, you could jump in. So with that, let's look at few stocks here. First one probably I would look at is Carnival Cruise Line here. Stock has been, RSI is 48, tells you stock is sold off. IV percentile is low. That's the typical candidate that we want to look at. And there are a lot of news about Delta virus, and stocks have been depressed, especially these cruise liners. So we should look at Carnival Cruise Line here. So if I go back here to CCL and look at Carnival Cruise Line here. So as you look through here, nice looking chart. Stock has been doing pretty okay. Earnings here, stock went up. Earnings, stock traded sideways. Earnings, stock came down. And I think right now earnings is a little bit later. And if you look through the volume here, volume is pretty steady. On the balance, volume is steady. At this time, stock is trying to decide where to go from a DMI perspective. Right now, as you speak, it may be in a bearish crossover. Probably the red line might cross over blue line. RSI tells you right now it's a little bit weaker, with the RSI pointing down a little bit. Volatility perspective, it's a low volatility. IV percentile is 25, pretty low. And then you got check-in money flow is pretty steady here. Money is flowing into the stock, especially the big players want to buy the stock when they're depressed. So with that, let's look into TTM Squeeze chart here by John Carter. So as you scan through here, we got daily chart here, and we got squeeze here, red dot forming here. As the red dot is forming, shorter term A wave is above zero. That's a bullish sign. Longer term C wave, it's below zero right now, or it's trying to see where to go. It's barely above zero, 0.09. That's a positive territory. So I think as you look through here, when it comes to lower side of the wave here, the dark blue is good. On the higher side, dark blue is weaker. So with that, I think it's a good indication that Carnival Cruise Line might go higher. And as you look through here, we got a squeeze. Let's see, there is no more squeeze here. But if you look through here, a 3-day chart, I think bars are becoming a little bit positive side, getting shorter here. And as you look through, I think there is no squeeze here. We can don't need to worry too much, but look at the shape of this wave itself. It's trying to trend up here, trying to trend up, becoming shorter, trying to here it's some red here. But either way, I think let's focus on here 1 year 1-day chart. There is some positive indication. We're catching it a little early here. I think you could play long here. So with that, let's go into option chain here and say Carnival Cruise Line. And typically, if you want to buy stock, I would say, just go ahead and buy at, ask price here, and, go ahead and commit. And as you look through here, right now stock is at $22.88. All-time high is $31. It's got some more room to run. If you want to buy options here, you could buy option at delta 70 or so. So right here you got delta 71. You can pay $4.70 and buy the option outright. So if you do that, you pay $470. And you have infinite profit potential. For every dollar the stock goes up or down, this option will go up or down by 71 cents, indicated by delta here. So if you don't want to buy call option outright, you could buy a call spread. So typically I suggest stock is at $22. So you could go probably say, I'm trying to think through here, maybe 17 and 27. That's a $10 spread here. You could go with that. So if you do that, 17 and 27, it's a good $10 spread here. There you go. So you're paying $4.93 here, and you are making $507. You're more than doubling your money here. Your break-even point is 22.43, just below the current stock price. So it's a it's really conservative strategy, because you're paying $4.93 to make 507, and your break-even point is below current stock price. This is a good strategy if you want to be a little more risk averse, instead of buying call option outright. So that's another strategy. So with that, let's go into a couple more stocks here. As you scan through here, Bank of America, and even many of the financial stocks are at a good area right now. You could buy some of these financial stocks. So let's take a look at Bank of America here. If I go here, let's go to a chart, BAC. There you go, nice looking chart here. And as you scan through, volume is on the balance volume is going pretty steady here, and RSI is 51 here. From a DMI perspective, it's trying to see where to go, higher or lower. Right now it's kind of bearish at this time. Blue line is above, red line still, but a little bit bearish. And on the balance volume is the check-in money flow is pretty steady at these levels. Low RSI, and I think at this time, with the low RSI and combined with the low IV percentile, that makes it an ideal candidate. So with that, let's go into a TTM squeeze indication here. As you scan through here, we got a squeeze forming in a 1-day chart here. When the squeeze is forming, it tells you there's a tight compression of volatility. At the time, longer term C wave is above zero. Coast is clear. You could go buy Bank of America. You could buy stock or call option. Same story as you look through here. We got weekly chart. There is a red dot here, indicates compression of volatility. When that happened, we got longer term C wave above zero, and the shorter term A wave is becoming bullish a little bit, with the bar getting shorter and shorter. So with that, that's a bullish sentiment here. So you could go to a option chain here, bring up Bank of America. So Bank of America, you could buy stock outright here at $41.27. All-time high is $43. So if you don't want to do that, you could buy call option for December 17, 101 days out. So you could buy delta 70 call option outright. For example, if you go here, we got delta 72 here. You could buy this. So if you do that, you're paying $4.30, and your break-even price is $42.30, just above current stock price. You could buy this and participate in upward movement of Bank of America. So if you don't want to buy call outright, you could even do a spread. Stock being at 41, you could look at probably trying to think through here, maybe say 37 and 47, the $10 wide spread. So if you do that, you could do 37.47 here. There you go. So there you go. So you're paying $4.53, and your break-even point now is $41.53, just above current stock price, and you're making more than doubling your money. You pay 453 to make 547. And I think it's basically limited risk, limited reward type play here. Your max profit is 547, unlike by call option outright. So you could confirm and send this and take it from there. So as we go through here, you can follow similar methodology here. We got a couple more stocks here. We got GDX here. All the gold stocks are down right now. Good to buy them when they're down. And along with them, we got GDX and GLD. They're all same story. And we got a couple more here. Digital Turbine, which is one of my favorite stock here. And Citigroup. We got DocuSign, GLD, even Boston Scientific, a good one here. Kinder Morgan, Host, AbbVie, Mondele's all work here. And as you scan through, we got one more page here. I've highlighted few ones in gray for you to take a look at. We got O, which is one of my favorite when it comes to the dividend play. O is, keeps going up all the time. And we got here NAOV, good one, low dollar stock here. American AIG is also a good one here, insurance play. We got Raytheon, works at these levels. You could buy some Raytheon, and even Southern. You could look at some of these and go from there. So with that, thank you very much. Happy investing and trading. Please subscribe.